You got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call. This is episode 324. This 1st of July, 11 a.m. right here in Singapore, GMT +8. Okay, so we'll take a look at the audience first. Yep, so if it's your first time here, a warm welcome. We do this currency call every Monday to Friday, and the currency we analyze on each day is as follows. So on Monday, we do the Aussie and Kiwi, Tuesday, Euro, Wednesday, Pound, Thursday, Yen and Gold, and Friday, Canadian Dollar and cryptocurrencies. So in this currency call, you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term traders, long-term investors, and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlight potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. All right, so yesterday's currency focus was pound. And also yesterday we had Kim Hong talk about the OPEC meetings, where he gave us an in-depth outlook of what to expect today with the whole OPEC meetings happening throughout the day. So yeah, watch yesterday's video if you want to know more about what to expect for the OPEC meetings. So tomorrow, Friday, 2nd July, the news item of interest that many traders are waiting for will be the NFP. And again, let's get Kim Hong here, currency analyst at LCMS Traders, to share about the NFP news release tomorrow. Kim Hong.
Okay, thank you, Junwei. Hello and welcome again to another currency call. Okay, normally I'll be talking about the non-farm payroll only on the day itself on Friday, but because tomorrow I'll be covering the what will be taking place later in the OPEC plus, and there'll be like a series of stuff that will be going on. You know, speakers talking about many different items. So I decided to just bring it forward and maybe like give you guys some an early, I would say, heads up, okay, to what to expect. Okay, so as usual, I'll do a recap of what happened during the previous NFP. Okay, so we actually, okay, let me just show you guys the okay, right. So back in June, okay, early this month, okay, the data released for May, okay, actually showed 559,000 jobs being added into the US economy, okay, as expected from 650,000 jobs. So we actually fall short of the numbers slightly, okay. So the main driver being the leisure and hospitality sector, okay, which added the highest number of jobs, okay, into the economy in May. Now, this was actually due to continued easing of COVID restrictions across the country, okay. We also see a slight decline, 0.3, okay, in the unemployment rate as well, okay. Now, what to expect for this time round, okay. So this is actually for the data that will be released tomorrow. So the market is actually expecting a 700,000 jobs being added in the month of June. Okay. Personally, okay, I wouldn't say that this is a good figure. Okay. In fact, I don't think the data is going to be spectacular this time around. Now, why is that the case? Okay, let me show you this. So the IHS market, okay, they released the preliminary data for the PMI, okay, PMI for the month of June in the US. And we can see that, okay, under the services sector section, okay, we see that they actually highlighted, meanwhile, struggles among companies to find suitable workers hampered employment growth in June. Okay, this is for the services sector. as you guys know that in the US, the services sector is actually the largest sector as compared to the manufacturing sector and the construction sector as well, okay? So this is actually one of the key points why I feel that jobs data this time around, okay, is not going to be that spectacular, okay? And then if we look at the manufacturing sector, okay, they also highlighted that difficulties finding suitable workers. Okay, so this actually has been an issue since a few months back because of the stimulus package issued out by the government. Okay, which kind of people speculated that it actually sort of like incentivized people to not look for jobs and just stay at home and things like that. Of course, other reason being that kids are not allowed to go to school. They are only allowed to attend classes through online. Okay, through online means from home. So parents, in a way, they are not keen to go back to the workforce, and so they can actually look after their kids at home. Okay, so if we have like the services sector and manufacturing sector continuing to have this kind of what do you call it, the jobs issue, okay, then we may actually be seeing not a not very nice figure this time around. And let me see if there's another point that I wanted to highlight, because they actually said that let me just, okay, I remember reading somewhere in this report that they were saying that jobs being added in the month of June, okay, is the slowest in 3 months. Okay, okay, I found it. So meanwhile, struggles among companies to find suitable jobs hampered. Although strong, the rate of job creation was the slowest for 3 months. Okay, so just now I showed you guys the previous month's data, which is like 559,000 jobs being added back in May. Okay, now if we actually see a slowest in jobs creation for the month of June, then I think it's fair to actually say that for June, the number of jobs being added is likely going to hover around the 559,000 jobs being created in May. Okay, so we actually have an expectation of 700,000 jobs being added. I feel that even if we were to hit the 700,000 jobs target, it's not going to be like what do you call that, spectacular, like 800,000 or 900,000 previously seen in, I think, March or April. Okay, now nonetheless, the non-farm payroll data this time around, or in fact in the near future, okay, will be very important. Now, why is that the case? Okay, this has to do with the Fed's dual mandate. Okay, so basically the Fed, just going to make it short, okay, the Fed has 3 goals. Okay, maximum employment, price stability, and moderate long-term interest rates. Okay, so since price stability will eventually lead to moderate long-term interest rates, so these 2 goals actually go hand in hand. Okay, as a result, maximum employment and price stability becomes the dual mandate, the 2 main goals that the Federal Reserve seek to achieve, okay, through adjustments of the monetary policy. Okay, now inflation, recently we have seen spike in inflation and things like that. Okay, so that is not much of a concern, okay, to the Fed. Why? Because they concluded that the spike in inflation is transitory and will eventually average to the 2% target over time. Okay, eventually achieving price stability. Okay, so price stability part is pretty much soft as of now. Okay, now the next part, which is the employment. Okay, as of the previous jobs report being released, okay, employment is still of a main concern because the US jobs market is still facing it's still falling short from the pre-pandemic level by around 7 million jobs. Okay, so prior to the pandemic, when inflation was stable, okay, we were seeing price stability at that time. Okay, and employment during that time was actually stable as well. Okay, was doing well. Now if we are still seeing a 7 million jobs as of now, okay, a shortage of 7 million jobs from the pre-pandemic level, that means we are still quite a far, I would say quite a distance away from a full recovery. Okay. Now, since the maximum employment, okay, is one of the main goal that the Fed would want to achieve, okay, in order to adjust the monetary policy, that means, okay, non-farm payroll data, okay, jobs data from the US from now on will be the key factor, okay, will be the key factor as to when, the Fed will actually, they have actually already talked about talk about these quantitative easing tapering, okay? It's just that when should they start doing it and at what rate they should be carrying it out, okay? So I would say pay attention to the non-farm payroll data tomorrow, although I personally don't think that there's going to be much of a data is not going to be like spectacular, that kind of thing. There's not going to be much of a fireworks, okay? But still, nonetheless, pay attention to it because it will be probably the main, I would say, factor, okay, as to what the Federal Reserve will be doing the next time around during the monetary policy meeting, okay? With that, just come back tomorrow and I'll update you guys on the the happenings of OPEC Plus meetings that will be taking place later today. All right. With that, I'll hand it back to Jinwei.
Okay, thank you, Kim Hong. All right, so let's head to the charts with the dollar index. We'll have Scott Andrews here from Forex Briefcase Australia to share his views about the dollar index. Scott.
All right, thank you, and welcome everyone for the Thursday currency call as well. A little bit to talk about on the US dollar too. So we did see a breakout, and like Kim Hong went into detail, it's really easy to jump on that optimism train in regards to when the US dollar has already sort of taken off, but it might be a situation where we're buying the hype and then selling into the news potentially. So my thoughts are that if you're not already in a position where you are long the US dollar, it's at a point where it has had a tendency to pull back, especially the sensitivities it has with and with Kim Hong's in-depth analysis into what's behind the situation with job creation. It's important to note that it's going to take a very significant number to really carry this US dollar higher right now. I mean, looking at the daily time frame, we're at a point where close to 92.40. We've seen pullbacks before. If I go to the 4-hour time frame, consolidation is what we'll see in the lead up to NFP, and that it's a point of interest for everyone, and they're waiting on this. And I'll just bring up the 10-year Treasury bond yield as well. So that's really holding steady. Everything is just, there's expectations, and I think the expectations are realistic, but we've seen last time when it was anticipated to be pretty good, and then it reacts poorly. So I would say that my thought process is it was a little unexpected, and there was a beat with the ADP non-farm employment change. We're still seeing issues though in the US, so I would say it's good to be sensible and not to just sort of jump in when you see something like this. You've got to really wait and just, if there's a beat on NFP, that would be great. But if you break down the situation, a more calculated assessment would suggest that we're just going to have to ease into this. And it's great to see it over 92 if you are long the US dollar. But I would say just you've got to wait to see how the market reacts, because it almost looks to me that it's anticipating and it's jumped the gun and then it has priced things in. So we could see if it is okay, close to expectations, then that's going to be fine. But if it does, miss a little bit, and it doesn't have to miss much to actually see some sensitivity with the buyers sort of stepping back. So I would say show caution. I'm going to lean on the conservative side and just wait. I mean, it's going to be interesting to see what happens. We've got obviously today, later on, there's a little bit of news coming out initial jobless claims. And we've also got later in the evening at 10 o'clock in the evening GMT plus 8, the ISM manufacturing PMIs. So this could, just give an indicator as to what's going on. But again, if you're not already positioned, it's I would say it's best to wait until, the number comes out.
Okay, thanks for that, Scott. Yeah, so today is Thursday, the currency in focus, the yen and gold. So today we have Jun Dao Tai, founder of LCMS Traders, a multi-million-dollar trader, trading account with more than US $15 million on a daily basis. All right, Jun, I'll pass the time to you now for the yen and gold.
Okay, thanks for that, Jinwei. So, those of you who are attending right now, you can see that the focus, as much as I've been talking about the non-farm payrolls since Monday and then a bit more on Tuesday, yesterday, and today, Kim Hong is all about the non-farm payrolls. Scott's looking at the dollar index and also planning for the non-farm payrolls. Why is the non-farm payroll so important? It really is that employment and economic number that's going to be looked at by almost anyone who is participating in the markets, whether it's currency markets or stock markets or any other markets. You pay attention to that. So you're going to see a lot of volatility coming around on Friday, tomorrow night, GMT plus 8, in the evening, where we see the non-farm payrolls being released. So one thing to actually take note of is, I'll show you the US yen here. So what are we looking into? What are we trading into right now? I think it's quite a good setup. Why I think it's quite a good setup is because you can see that the US yen is sitting at a level. It's sitting at a 111.16 level right now. Same thing with the euro yen, it's sitting at a 131.71 level right now. And also with the pound yen, we're sitting at a 153.50 level right now. So leading up to this, I think that there's going to be a lot of opportunities with the non-farm payrolls once we see those reactions, reacting off a support or a resistance level. We're going to see quite good trading opportunities come around. What to plan for at this point, Kim Hong has given us a very good insight into what could happen on the non-farm payrolls. So here on forextradingasia.com, looking at the economic calendar, Thursday, today, we are looking at some news, but not big price movers. We've spoken about the Euro manufacturing PMI numbers. We've talked about the pound already. The US initial jobless claims from 411 to expected 390 is not a big change as well, not a big number there. So I don't think we're going to see a big upset at this point, also because this is a weekly number. ISM manufacturing PMI expected to stay at about a 61 level. So again, I anticipate that we're going to see the markets really sit in a horizontal fashion for today, all the way till tomorrow. You can see there's no news in the afternoons, or almost no news in the afternoons, leading up to the 8:30 non-farm payroll number. There's a bit of a, looks like there's been a bit of a revision, was 559, the revision on the expected number at 700K now, with unemployment rate looking to drop from 5.8 to 5.7%. And then paying attention to the average hourly earnings, looking to go from 0.5 to 0.4, still a very good change in terms of average hourly earnings. So if these numbers do come out, I don't think we're going to see a big jump in terms of the data. I don't think, like Kim Hong says, we're not going to see that 800 or 900 non-farm payroll number there. We're not going to see, I don't think we're going to see a 5 or 0.5 or 0.6 number here. And I don't even think we're going to see a 5.6 at this point. So it looks like it'll be relatively positive numbers, but quite subdued. Positive numbers, but quite subdued. So what this actually could mean and translate to the charts here is that we're going to see good numbers. It might have been priced in already. It might have been priced in a little bit. You can see that the US yen has been climbing up and recently just had a big move upwards towards the 111.16 level. So it might be priced in already. If we don't see very good numbers from the non-farm payroll, I think we might actually, or we could actually think of it as a bit of a disappointment. Think about that. We could see it as a little bit of a disappointment. And if it does translate that way, then this could actually be quite nice on the US yen H4 time frame. You could look for it to drop, to reject this 111.16 level. Look for it to reject that level. I will be a bit cautious. I would say look for selling opportunities below 110.90. You could be looking at a 35, 40 pip stop loss for a good 80 pip to a 100 pip take profit level towards the downside. But pay attention, this is a massively counter trend trade. So you could be looking at this trade. It will be something that you have to manage quite closely. I don't think that it will be quite a straight line downwards. It might come down about 40 pips before sitting across. So you have at least a 1:1 risk reward ratio trade towards the downside. In the best case, a 1:2. If we do see good US news, then you could see it break above that 111.16 level up towards 112. That's quite straightforward. We could actually see that move upwards towards the next resistance level. But if we do see a disappointment in the news, I would, okay, for the US yen, I would actually be more keen to see it as a good news, following that trend, letting it break that resistance of 111.16 to move up that 60, 70 pip up towards the 112 level. That would be a trend following trade. I'll be more happy with taking on that opportunity. Obviously, if we are looking at the euro yen here at this point, and if it's going to be a bad news coming from the US employment numbers, then we might actually anticipate that downward move in the yen. We might anticipate a downward move in the yen. And if it does hold, if that 131.71 level does hold, then we could look at it resuming that downward move. So the key word here is resuming that downward move. We've seen it drop since June. Well, since June, we've seen it drop, bounce back up. Now it looks like if it gets resisted by that 131.71 level, then we could see it go down about 80 pips. Your stop loss will be about 40. Again, a 1:2 risk reward ratio towards the downside. So comparing the US yen and the euro yen, I would say US yen, look for a good news scenario, trading it upwards, following the trend. Euro yen in a bad news scenario, anticipating that the yen will gain some strength. We see it coming down. We see resumption of that downward move towards that 130.51 support level for the euro yen. Okay. And then with the last of the yen pairs, we have the pound yen. Pound yen right now sitting at the 153.50 level. This could, depending on how it goes over today and most of tomorrow, this could be an opportunity to straddle. It's sitting right in that middle of a relatively big range. You could be looking for a straddle opportunity, you know, buying above 153.73. You could be looking at I don't think it go 140 pips, but you could be looking at a maximum of 140 pips upward move, or a straddle towards the downside below 153.25. You could be looking at anywhere from 100 to 150 pip on a downside move. I think this would be something you leave all the way till Friday, right? Almost right before the news. Set in your buy orders, set in your sell orders, and then be ready to take that quick opportunity and the quick spike on the pound yen, we normally see quite big volatility on the pound yen with the non-farm payrolls. Or actually, we see the volatility in the pound yen across the board most of the time. So with all that in consideration, what could happen to gold here? I think gold, and you all know that I don't trade gold. Gold is more a long-term, something that I hold and stretch out for a very long term. So gold, you're looking for buying opportunities. I'm looking at good places to buy for at value, right at the current price of 1773. At this point, we've seen that big drop, we've seen that big retracement. I think this will be a good opportunity to buy at value. If we do see bad US news, we could see some move back towards gold. We could see that move back upwards from this 1773 level towards the 1845. And I would really love to see it hit that 1954 level, but take it in sections, take it in parts. I think at this point, very good value at 1773. The last time we saw it at any lower was 1682. And if I do zoom out, we can see that at 1682, even the last time we saw that was last year, in June last year, where it hit 1682 and we saw that big upward climb. I don't think we'll go straight up towards 2000 again, but I think this is good value or good opportunities to be buying. Could repeat what we saw in November last year, where it reacted to this level and still climbed back towards that 1954 resistance level. So with that, quite a lot of things to think about, especially with the non-farm payrolls coming up, and especially with a lack of news across this week. So you see a lot of consolidation, giving you the opportunity to take advantage of planning your trades and also being ready to jump onto some volatilities when we see it on Friday.
Okay, thanks a lot, Jin, for the in-depth analysis on yen and gold. So just a reminder again, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. All right, so Daniel, I understand that LCMS Traders Club had their Wednesday live trading session yesterday night. So do you have any trades that you want to share with the audience today?
Yes, thank you, Junhui. Yeah, we had a very great live trading sessions yesterday with the club members. So basically what we had yesterday, LCMS Traders Club, every Wednesday evening at 8 p.m. We show LCMS Traders Club, come together, trade together. We look at what happened in news as well, how to prepare on the spot, what to be trading, or prepare what to do for the night. In the evenings, this was reasons because there are a lot of I get a lot of feedbacks from members that they have no time to trade, and also they can't take any trades. They only have a few hours in the evenings, can't do much. So that's not true. So it is really on Wednesday evening, 8 p.m. we were preparing, looking at the charts, looking at what's happening in news, based on 5 steps analysis. What could we do? So really, you don't really need to be on the computer for the whole day, and we just select, only the evenings time you can make profitable trades. Now we were looking at the charts yesterday, and look at the time we were preparing to trade, and from 8 p.m. to 9 p.m. we were just preparing to trade 2 news that came in. We have the US ADP non-farm employment change, which was better than expected, and the Canadian GDP also better than expected. So we were looking prepare the charts and to take the trades, but unfortunately it didn't go as planned. So that's where it's good as well. If you have preparation, it doesn't go as planned, you stay out and watch what kind of trades to be done. But nevertheless, we also reviewed all the currency pairs. We not only just trade the news, we evaluate and actually came out with 4 trading ideas, especially for that night, just waiting for everybody to trade together, right? So straight away, the first one we had was the Aussie USD. Now, Aussie USD, on Monday we really talk about this, that will go possibly hitting the resistance, coming back down. It did that already, and we are still waiting for a possible, as we see US continuously have a good news coming in, and if it's so, we're waiting for a trade idea. Yesterday, waiting for it to break at 0.7480. If it does breaks down, then we could look for a second part of coming down towards the resistance for a short-term trade. It didn't happen last night, so we're probably got to wait based on the 5 steps analysis. The next news is coming in the evening. If it doesn't really break, then so we will hold it and see what happened in the news. The other trade we have was the US Swiss. Right, the US Swiss really very nice. At that night, it was in the resistance zones, coming up with the with the good news coming in. We will have to wait patiently. We waited patiently, and after 9 o'clock, it actually did happen. We waited. I mean, it touched the 0.9245, waiting for it to buy the trade coming in. It didn't only after about 1 hour after 9 the trading sessions, but the trade idea is there. We were looking for a buy trade, and it happens that right, breaking out. We took the trade. If we were looking for, especially I tell everybody that we look for probably a short-term trade, because every day from Wednesday, Thursday, Friday there are US news coming in, and especially NFP. I mean, you heard about it. NFP news is coming in. It could cause some slow-moving trades to happen. So if you've got 5 to 10 pips trade, you could be looking to have a quick exit out. And indeed, as it breaks out above the 0.9245, it went out to about 10 pips or so. You could get out. Else, last night, early in the morning, it retested again at 0.9245 and going back up. Now, for those who attended yesterday's, it's possible we want to look at a possible exit out, for 10 pips or the 12 pips or take profit target, it will be great. Then also we actually have 2 more other trades we have. We had the Euro USD, still looking for it to sell. It was in the support zone, so we couldn't take a trade part. We were looking for, if it's strong US news, we could also be looking at, if it breaks at 1.1840, to look for a possible sell trade. It hasn't happened yet, so we'll probably still be in motion waiting in. Now, the best for last is the Cad Yen. Now, we had the news yesterday. We saw those US news, good US news came in the housing news. We also had the oil inventory coming in, and of course, everybody, Kim Hong has also mentioned about the OPEC news. So we're looking at it, and if we're looking at the inventory, it is a high inventory. There could be a strengthening of the Canadian dollar, which is quite closely related to oil. We weren't looking, and we decided that we were looking at US CAD because number one is in the resistance zone. Number two, with the strong US dollar news coming in, it's going to be a mix of fight between the buyers and the sellers here, demand and supply, right, of the Indonesian currency. So we look at Cad Yen, which is quite closely correlated to oil prices, most of the time. So we look at it, really very nice. We're looking for possible straddle actually, but we have a bias of the upside because we had a good Canadian news coming in. GDP better than expected. It isn't an expansionary phase, but still nevertheless better than expected. We've also compared the higher inventory in the US. It is shoot up. We were looking at to buy at 89.45. It did that. So we also could take a trade coming in, and I personally take this trade last night as well as rated. It went up to about 15 pips. I target about 20, about 15 pips, quite high above the Bollinger Band. Those who knows the 5 steps, and also what my students have done. Actually, so far out of Bollinger Band, I said that it's the time to close the trade, and that we did that as well. Okay, so yeah, so everything right now is really great that we have here. Everything right now here, it is part of the LCMS Traders Club here. So as the LCMS Traders Club, do join us here, at www.lcmstraders.com. Let me see here. Yep, we have it here. LCMStraders.com. The club membership is, and you can access our platform. Join our coaching sessions on Monday and Wednesday evenings. It is really a chance to join here, worth thousands, but right now it's only at US $49 a month. Now, this really is, without a doubt, the very least you can do to achieve your best in trading. Now, this price we can change any point in time. So do get aboard right now and get all the benefits from the Forex trading community here in LCMS Traders Club. So don't wait right now. Go to lcms.com.sg, click on this US $49 a month, sign up, fill up and sign, and I'll catch you back, catch you in the club as soon as possible. Okay, Jinwei.
Okay, thank you, Daniel. So yeah, guys, the link is tradersclub.lcms.com.sg. I pasted that in the chat. So yeah, if you want to join in twice a week weekly coaching and get the signals analysis, yeah, do join the group and get supported for your trading. Okay, so we have come to the end of the session today. We'll see you guys tomorrow for the Canadian dollar and cryptocurrencies, and important session tomorrow as NFP is also tomorrow. So see you guys tomorrow. Yep, goodbye.